This video is a replay of a trade I took today. Now, it probably goes without saying, but I'll say it anyway. I am not a financial advisor, and trading entails risk. Just because I got these results today doesn't mean that I can get these every day, nor that you can. Remember, the entire premise of the investing project and the $1 million experiment is that I am not an expert, and yet I am learning how to do this. So for heaven's sake, don't just blindly copy me. Instead, find a mentor, someone who is an expert, and join their community. Pay for their mentorship. This approach has worked very well for me, and it likely will for you too. So use this video partly as education and partly as inspiration. After all, if I can learn this, you can too.
Okay, this was a bit of a frustrating day. I have a self-inflicted stupidity tax wound on this particular trading day. And I'm going to share this with you because it's something that's worth noting here. And by way of an analogy, I used to fly radio-controlled model airplanes. And whenever I flew the planes, my buddy would be videoing it, and I would do the same when he was flying. And we used to have this mantra that we either get a good flight or a really good video, because we always love to watch the crash videos, because there's something that's insanely interesting about crashes, it seems. Well, anyway, as a metaphor, I guess, it's very similar when you're trading. You either get a good trade or a really good lesson. And this is what we're going to get here, a good video, because I screwed this up. Now I'm gonna zoom in on this. We've had like 6 days of positive returns on the markets. So we're about due for a pullback, even if we are in a situation where the Iran ceasefire is happening and maybe it's going to hold, who knows, but the market seems to think it is, and everything's going up. And that's made shorts difficult to place. However, I'm going to zoom in on this here. I put a trade in on the, no, I'm not zooming in on that, on the, yeah, this is not what I want to see here. You know what, bear with me a second. I am going to change to a different workspace. Here we go. That's a bit better. And let me just move forward here. And let's have a look at this. There. That's what we want to see. So this was overnight, just before the market opened. We had significant wicks off of this pre-market high level of 68.90. You can see that there's pulling back two different, these are 15-minute, two different 15-minute wicks. If you look at the hourly, you can see what it looks like on the hourly. It definitely reached up to the 68.90, pulled back substantially. Then it went up to 68.82 and pulled back substantially. Now, if we go back over here to the 15-minute, this is the setup right here. It pulled back from the 68.82, and I'm going to get in on the break of this 15-minute. So the sell point is right here at the 68.66. Yeah, that's right where it is. And that is a perfectly good setup. So let's go ahead and play this forward, and then I will talk about how incredibly stupid I am as a human being. So let's do this. Okay, now let's look at this. This is automatically setting me up with a 15-point stop. And so I, in my unmitigated brilliance, said, oh, I'm going to move this up to 68.82. Well, that's stupid. And the reason it's stupid is, now, first of all, if I was really playing it legit, I probably should put this stop way up here above the 68.90, because that was the significant turning point of this trend, the pivot. But I'm not willing to risk that much, so I was going to put it above this near-term pivot, which actually makes sense, because I'm getting in. This is the bar I'm getting in on, so I'm only willing to risk as much as this bar is in size. But I know perfectly well that people come up here, that the market will be stop hunting. They will be looking for stops right above this bar. And yet I left it at 68.82, which is just mind-numbingly stupid. What I should have done is add at least 3 points. When I trade the NQ, I make a deal with myself that, even if I'm trading it with a 100 handle stop, I'll pull my wallet out. I'll pull out $40. I'll slap it on the table, metaphorically, and say, look, I am buying an extra 20 points. Each point on the NQ is worth $2. So that extra 20 points is an extra $40. So normally I might only be risking $100. I'd be risking 100 points, $200. I'm willing to spend an extra 20%, risk another 40, just because I know that those stops get hit all the time. And it doesn't necessarily mean that the market's reversing. Okay, so the same sort of rationale applies over here on the ES. So if I'm taking what would end up being like a 16 point risk, I could add another 20%, another 3.2 points. Let's say just another 3 points. And this thing ought to be at, I was at 68, 66. This thing ought to be at 68. Am I doing the math correctly here? Whatever it is, I need to be putting 3 points beyond the stop here. So this was really a 19 handles. What I should have been doing is having a 19 handle risk. That's perfectly legitimate. That extra 3 points costs $15. Okay, so it's going to expand my risk by $15. You know what? Cost of doing business. I should have done that. I didn't do that. That was stupid. So let's let this play. Now bear in mind, I had my stop at 68.82, which is going to stop me out. But let's let this thing play. And let's pretend that I didn't do that. So let's just go ahead. It's going to do its thing. Now, this may take a while, and I have this at 1,000 times speed. It takes a little while for this to play out, which is part of the reason why it ended up stopping me. Now, if you want to, you can put this on double time or triple time playback and skip to the interesting bits. But it goes partly in the right direction at first, but then it spends a whole bunch of time in the wrong direction. And as you can well imagine by the fact that it went above 68.82 and stopped me out. I'm just going to let this play. I don't necessarily have to narrate the whole thing. You know what might be better is I'm going to go and switch to the 5-minute. We can just watch it on 5-minute. Now it's been challenging, and we can actually see that the market was turning around. Now bear in mind that I had previously had this at 68.82. That's where I get stopped out, right there. And that's interesting because it then turned around and like just right there, right exactly at my stop, stopped me out, and then turned around and went the other way. And it's just that's absolutely infuriating. Now the reality is, it did eventually, after a little while, come back and go a little bit higher. I think a 68.83 or something, which I felt slightly vindicated at having put it at 68.82, but not by much, because the truth of the matter is I should have given it at least an extra 3 points of room. I was just, the execution, I suffered a little bit by being stupid there. In any case, let's let this go. And this does take a little while to play out. In fact, it probably takes several more hours. Luckily, we're at in fast mode here. Okay, now this is the 68.83, where I thought, okay, at least it got beyond the 68.82. So but again, so what? You don't give yourself one extra handle; you give several. All right, now by this point, it's looking like okay, it's gotten right back down to pretty much where I got in, and of course I'm out. I have a minus $80 or something. Was it 16 handles of risk? I'm out. Yeah, minus $80 at this point. Just watching this thing get right back to even, and instead it left me as a casualty on the battlefield there. It's really stupid. And now it's heading entirely in the right direction. This is the move I expected. It's the move I wanted. Now I'm going to pause this for a second here, because as this is happening, now admittedly this is 2 hours into the trade. What I would typically do if I am worried about this thing snapping back is that I might be tempted to take this stop and move right down here and sort of trail the 5-minute bar. So right at the, if I'm going short, I'll put it at the high of the preceding 5-minute bar, which technically is this bar here. But if I might be preempting a little bit and put it there. But let's let it go. Technically speaking, my rules are that once this moves 15 handles in the right direction, it moves the stop to break even, and then I can trail the 5 minutes. So really, I ought not to be doing that. But let's just assume that I might very well have done that. And if I had, not only would I not have lost $80 or 16 handles, I would have gained another 6 over here by putting it right at the top of that. But let's let this go, because it's gonna bounce back a little bit in a second. And I'm just going to let this follow my true rules here, where it actually goes and waits for the 15 handle move before it moves the stop to even. There's a reason I have these rules, for heaven's sakes, and it's because it does bounce around on its way to making the move. And if I don't let it have the space to develop, then I don't get the trade. It's that simple. This isn't exactly rocket science. All right, we are at equivalent of 9:30 Pacific time, so we're just about 3 hours into the trade here, and it's working. The trade is doing exactly what it's supposed to do. It's not fast, it's not elegant, but it's doing its job. Okay, now we're at even. Now it's trailing, and so now I am perfectly justified in trailing this to the top of the preceding 5-minute bars. And so now this would have locked in, instead of a loss of 16, it would have locked in a profit of 10. So let's keep going, mostly because I'd like to wallow in my misery. Okay, so now 2 more. So we're locking in a profit of 12. And do we get stopped out? There we are, we're stopped out. Okay, so let's be clear. I took a loss of 16 instead of a profit of 12. That is a spread of 28 times 5 is 140. I'm having trouble with the math. But the point is, that is an opportunity cost of 100 and, this is going to bother me. Should be able to do this in my head. Kind of embarrassing, isn't it? 28 times 5. 140, that's right. All right. So this is an opportunity cost of $140 per contract that I'm trading. And and I deserve it as a fine for being a dummy. But I'm not, I wouldn't be getting down on myself were it not for the fact that I know better. I know better. I have this exact policy on the NQ because I've been burned a bunch of times, and I just didn't think of it properly on the ES. But I should certainly have given it at least an extra 3 points of room. And that extra 3 points for an extra $15 of risk. You're already in it for $80. So you're in it for $95. Who cares? The point is, I lost the 80. I lost the additional 60. It was there for the asking, but sadly, I didn't get any of it. So, lesson learned. Remember, give yourself several handles of buffer on the placement of the stop loss, because the market does hunt for these. They know the market knows perfectly well that, especially on the 15-minute here. If you go back to the 15-minute, it's perfectly knowable that this 15-minute bar acts as a pivot point, and people put their stops right after it. That's why it's not uncommon for the market to come up, trigger the stops, and then carry on. Now, it's nothing specific about my stop, because I'm not even a drop in the ocean, but lots of people do it, and that's why that happens. So giving it an extra few handles is the thing that makes the difference, and I know that, and I didn't do it anyway, so it cost me. Anyway, hopefully that makes sense, and if you can learn from that, so much the better for you. I will now exit this and keep that in mind for the future.